Good evening. I'm Dan Fitzpatrick, stockmarketmentor.com, 11/11/15. That's November 11th, 2015. We're looking at Ulta. I cover this in the strategy session a bit tonight, but don't go there. Not right now. Retail is not where you want to be because nobody else seems to want to be there. Things are selling off a lot of basically because of Macy's, but competitors ain't doing that well either. Who's going shopping in stores anymore? Well, I'll tell you, Ulta, bricks and mortar, website, they kind of got it all, and there's a lot of people that care how they smell and how they look, how their hair looks. So this is a stock that's been consolidating for quite a while. I wouldn't be buying it right here. You're not getting paid. There's no dividend. If it falls back to, say, 160, then I would look to buy it. And the reason I would is because it's close to the 200-day moving average. It gives you a defined risk where you say, okay, 200-day moving average, which, by the way, will continue to go higher, but you buy it as close to the 200-day moving average as you can because the stock's always been above the 200-day moving average for a long, long time. And then you keep a stop set just a little below there to define your risk. But if you're buying it right now, you know, I think as long as the stock ultimately breaks out, you get that play on words, Ulta, ultimately, as long as it breaks out, then you're going to make money. But this is known as a bearish engulfing pattern where the stock gapped up above yesterday's intraday high and is closed below yesterday's intraday low. And that was on volume, heavier than average volume. So you look at this, and this is a stock that for right now is under distribution. I like Ulta. Everybody who's been a member knows I like Ulta. But you also know that I like stocks that are moving higher. The longer this drifts sideways, the better it is to me because you've kind of raised the average cost basis of folks that have just bought the stock. I mean, as it is, there's a lot of cost basis of a lot of people is 165-ish, something like that. So when the company reports earnings on December 3rd, as long as the earnings are okay, the stock should probably continue the uptrend because it is in an uptrend. Okay, so I would just want to wait on Ulta, wait for a better entry. And by the way, if the stock breaks out 175 without you, well, so you missed the best entry, get the next entry and buy the stock. Easy peasy. One thing that you don't want to be doing is doing Footlocker. Footlocker, lower highs, lower lows. See some people in Stock Market Mentor and Option Market Mentor looking for short candidates. Here's a short candidate. Don't short it now. You'd miss that short. But if the stock starts rallying back up to the 200-day moving average, and at some point it's going to rally, that's when you want to look to short. Short, and short. So if the stock rallies up a bit, this is when you want to be looking to short the stock because you would keep your buy stop just like, right up above here. So you don't want to have a buy stop at $67, $68 when you've shorted at 62. You'd rather see the stock rally up a little bit and then start rolling over, and you short the stock at 65, 66, maybe even 67. So that's your trade in my view on Footlocker as well as Ulta. Okay, members, over to the strategy session.